Sean Binkley from Dominion Lending joins us. We are talking about property taxes today, some tips on paying them in time and ways to pay them. And property taxes is something you really should be paying, isn't it?
Absolutely.
Yeah, it comes with owning your home.
This is a must. I've run into a lot of homeowners over the years that will defer paying their property taxes if it's not within their mortgage or they haven't arranged a payment plan directly with the city. And they seem to be of this mindset that, well, it's okay, they won't sell my property until I run 3 or 4 years in arrears. But this is a bill that you have to pay on a regular basis, and it costs you if you don't. You have to pay what you owe. And also, if you have a mortgage, this is part of your mortgage contract. You have to pay your property taxes. You have to keep your fire insurance up to date. You have to maintain your property. That's all part of your mortgage. And if you don't pay on time, there's a lot of unnecessary interest charges and penalties. In the city of Kingston, and most cities are this way, the date that it's in arrears, there's a 1.25% penalty that you have to pay. So on $3,500, it's 40, 50 bucks. Doesn't seem like a lot of money, but it's the interest that's going to add up on that. That's the interest amount is 15% per year, or 1.25% per month on top of that as well.
Okay. Some people wonder, they talk to their friends who live in different parts of Kingston and they pay different amounts of property tax. So how is your property tax calculated? Is it based on the value of your home?
Yeah, it's based on the value and what the Municipal Property Assessment Corp has assessed your property at. You can appeal that. There's a great video actually on the City of Kingston website. It's a great site for that tells you how it's calculated. Also, you can look up any property that you're interested in, how much the property taxes are. It's public knowledge, and that's all searchable on the website.
And that's always great information when you are looking at buying a home, just to see what that property tax value is.
Yeah, especially if you're buying it privately and not through a realtor that's checked it out. You can double check to make sure that the homeowner is giving you the correct information about that property.
Very good. Okay, so we have to pay it, and there are now some options when it comes to paying.
Yeah, there's a lot. So years ago, people would think, well, I don't want that big bill twice a year from the city. And you can still get billed twice a year. For many years, people, and especially first-time home buyers, they like to put their property taxes in with their mortgage. So the mortgage company will collect from you in advance of when it's due. So it's not that they don't like to pay it and then take from you. They like to take from you and then pay it to the city.
Okay.
You can pay it twice a year, like everybody's done for years and years, or you can pay directly monthly, and that's a really neat way to do it. So what I've found that instead of going through your mortgage company and having it increase the amount of your mortgage payments, which seems convenient because it's just a one payment, but your mortgage payment will fluctuate from time to time because of that adjustment each year. If you happen to be behind on the tax account, then the mortgage company will double up your taxes, and at the end of the day, it doesn't work very well for budgeting. But if you can pay the city direct, they have a monthly payment plan. They just take your property taxes. We've got this on the next example here. So for a $3,500 tax bill, city will divide that into 10 payments. No, there's not 10 months in the year. There's 12. But they'll take $350 a month out from January until October. And that's, I do that myself. And when November rolls around, I look at my bank statements like, oh yeah, I don't have a payment this month, right? So total bonus for Christmas time that there's no payment in those 2 months. And then it starts up again in January.
Okay.
The neat thing about that is that you're not dealing with the middleman of the lender taking from you and then paying the city. You're dealing with the city directly. It's always up to date, and you know exactly how much you're paying.
So you almost have more control over the situation, and when it comes to budgeting the household income, you know where you stand.
Completely. I've found most clients that have moved from in with their mortgage to now paying it direct, and they have to make sure, like the lawyer will not follow up for you, your lender, well, they will get upset if you don't pay your taxes, of course, and again, it is part of your mortgage, but this is up to you to make sure that you do it. It's very easy. There's a form on the website. The city website's fantastic. It's a form that you can print out, just attach a void check and send it in, just like anything else that comes out on a monthly basis.
Now, can you switch the way you pay? Like if you've been paying through your mortgage up until now and you're hearing this morning and thinking, oh, maybe the 10 months of the year, that sounds good. Do you have the flexibility to switch the way you pay?
Yeah, great question. You absolutely do if your property taxes are up to date.
Okay.
If they're not up to date, you have to get them up to date, and then you can move to the monthly payment plan. You can do that anytime.
Thank you, Sean. Great
Thank you.
advice. We'll see you next week.
This Dominion Lending segment has been brought to you by Sean Binkley, broker and wealth and insurance planner.